What a week in crypto. Trump's bold claim that the United States just signed a deal with China, yeah, that sparked markets across the board. Inflation fighting talk from the Fed, it just got louder. The US mortgage regulator opened the door to recognizing Bitcoin as an asset for home loans. Oh, and if that wasn't enough, crypto ETFs are lining up like never before. Plus, the government is now making moves to accumulate Bitcoin. This isn't just breaking news, it may be the signal flare of something much, much bigger. Hey everyone, welcome back to JRNY TV, where we turn that noise into clarity and those headlines into strategy. I'm Nick, and today we have got a huge episode. Trump's shock trade announcement, sweeping crypto policy updates, ETFs popping up everywhere, and Marco Q's pushing Bitcoin to new highs. Stick with me. We're going to unpack each price step by step, so you're not just watching the headlines, you are using them. Trump's trade deal and why it's bullish for crypto. This week, Donald Trump dropped a bombshell. We just signed a major trade deal with China, he said, pivoting heavily on rare earth exports and tech rules, with future talks hinted for India as well as the UK. Stocks responded immediately, rallying global indices and boosting risk assets across the board. Crypto wasn't left behind. Bitcoin surged past $108,000, driven by renewed risk-on sentiment as investors shifted from safe havens into growth and innovation. Even though the details of the deal are sketchy, macro trades are looking at this as a de-escalation and geopolitical tension. Historically, easing US-China trade friction weakens the dollar and lifts commodity as well as risk asset prices. For crypto, that means more capital flows, greater retail participation, as well as increased institutional interest. Its global trade headwinds slow down. Crypto stands to benefit right now alongside the equity markets. But don't confuse that hype with substance. Markets will need confirmation. The next test is whether the agreement passes the eye test and if China follows through on export policies. If rare earth and tech flexibility materialize, expect tripwires for crypto futures and even retail buzz. Until then, it is a loaded pistol, missing details but packed with potential. Still, crypto is already reacting. Those flow metrics are showing strong demand. Whale wallets are moving and total crypto market cap has clocked a $150 billion jump since the news dropped. Call it a preemptive gamble, if you will. But if the deal holds, we could be looking at the opening moves of the next major crypto rally. Crypto regulation sprint and mortgage approval. This week, the US lawmakers, they were hitting the gas on crypto regulation. Senate Banking Committee Chair Tim Scott had confirmed that the landmark market structure bill will likely clear Congress by September 30th, following the passage of the one and only genius stablecoin legislation. With some support from the Republicans like Cynthia Lummis and Alexandria Lummis, as well as the White House signaling joint coordination, this package could lock in a stable legal framework before fall, which would open the floodgates for institutional investment with confidence. Simultaneously, the FHFA dropped bombshell news. Fannie Mae and Freddie Mac, they could soon accept crypto holdings toward mortgage reserves without forcing conversion to US dollar. The directive mandates that they evaluate crypto reserves held on regulated exchanges, consider volatility, and report back with policy proposals ASAP. That shifts crypto from fringe asset to mainstream collateral, which may reshape how banks underwrite loans as well as view their consumer profiles. These legal developments matter not just on paper, they're unlocking real-world use cases for crypto. If homeowners can qualify with Bitcoin, it increases demand, mainstream acceptance, and utility beyond trading. And when combined with stablecoin as well as market structure clarity, it is a powerful message. Crypto isn't dodging regulation, it is getting integrated. So, if you are betting on the future of crypto adoption, keep a close, keen eye on that September deadline. It may be the tipping point between niche and necessity. Pro-level insight only, ETF Frenzy and Bitcoin rally amid macro shifts. That ETF scene is heating up fast. Invesco and Galaxy both just filed for their QSOL Solana Spot ETF, making it the 9th Solana ETF in the race. Those Bloomberg analysts, they peg the odds of this approval at around 90 to 95% by the end of the year, with a probable nod as early as July, which is next month, maybe 2.5 weeks away. This surge in altcoin ETF filings is riding that wave of previously approved Bitcoin and Ethereum funds, signaling that mainstream financial players are very ready for the broader crypto exposure. The solid ETF momentum isn't limited to SOL either. Market odds for XRP, ADA, DOGE, and other altcoin ETFs are climbing past the 90% mark, according to Bloomberg. That means it's not just Bitcoin and Ethereum anymore. So those investors, they may soon have regulated entry points into the altcoin sector. If any of these altcoin ETFs go live soon, it could kickstart a fresh wave of institutional inflows, especially into DeFi infrastructure and layer 1 plays. At the same time, time, Bitcoin broke that $105,000 level, going right up to $108,000, fueled by a fragile Iran-Israel ceasefire and softening oil prices. Analysts note Bitcoin holding above its 50-day moving average, which is $106,000, is a strong signal that the rally might just be getting started. With the US Treasury yields that are dipping, as well as the dollar that's continuing to get weaker, crypto is finding a very favorable macro backdrop to help stabilize and build further momentum. Combine that with real signals like Trump's push for Fed rate cuts, also his verbal sparring wars with Jerome Powell, and easing geopolitical fears, and you've got yourself the perfect storm for capital inflows into digital assets. Momentum traders, they will also likely jump at both crypto's macro tailwinds as well as the upcoming ETF catalysts. And long-term players, they should also be paying attention. Stocks rally with tech, crypto momentum. The broader stock market just hit fresh all-time highs, and tech, as well as crypto-linked stocks, are leading that charge. The S&P climbed to a new record high of $6,178.80, thus powered by strong gains from AI chipmaker Nvidia, which has surged a whopping 61% since April. And mega caps like Microsoft, Amazon, as well as Meta are all leading that charge. Tech optimism and fading geopolitical fears have also given equities a clean breakout and a solid risk-on vibe. Amid this rally, Coinbase, known as Coin on the stock market, has skyrocketed to its highest levels since debuting in 2021, recently reaching $382 before a slight pullback. That milestone doesn't just reflect crypto's recovery, it shows belief that platforms exactly like Coinbase are legitimate financial institutions. Bernstein, they even raised its price target to $510, calling Coinbase the most misunderstood company in crypto. So yes, while that good old S&P is breaking those records, crypto and tech stocks, they are outperforming, a key bullish indicator for the crypto sector. When those investors' appetites, they favor the bleeding edge tech and digital asset exposure, it often cascades into crypto itself. And with FOMO on Wall Street like never before, this week especially, capital isn't just flowing into AI, it is spilling over into Bitcoin, Ethereum, as well as other platforms that are enabling them. All this is setting the stage for the next leg up of crypto. Strong macro performance, tech tailwinds, and Coinbase crossing its initial peak point to an environment where digital assets are now being viewed as part of mainstream portfolios. These are not fringe bets. If you are positioning for the next bull wave, this alignment matters. Powell now greenlights banks for crypto, but Fed buying Bitcoin is still a no-go for now. Federal Reserve Chair Jerome Powell dropped a major update this week. US banks are now officially free to work with crypto firms. That's right, one more time. US banks are now officially free to work with crypto firms as long as they manage risks properly and help maintain financial stability. That is a historic shift, signaling the Fed isn't drawing red lines around crypto banking anymore. It's actually welcoming it, providing it's done safely. That vague reputational risk barrier is now out, clearing the path for banks to custody, facilitate, and even trade digital assets. Finally, despite this openness, Powell was crystal clear. The Fed itself cannot, for now, buy Bitcoin or hold crypto. He strongly emphasized legal constraints under the Federal Reserve Act, saying any change would have to come through Congress. And he doesn't expect rules to change anytime soon or overnight. That stance outlaws any direct Bitcoin accumulation by the Fed, but does not rule out future legal updates, especially if lawmakers push for strategic Bitcoin reserve under a new administration. Here's why the nuance matters. Banks now have the green light to legally interact and innovate with crypto, powering services like custody, payments, and token issuance. But the Fed, while endorsing the market participation by banks, isn't stepping into the asset itself. Still, this fence, it could shift fast, especially if Congress enacts laws like the Bitcoin Reserve Act, and with Trump-era officials pushing for crypto adoption. So yes, definitely, crypto is rapidly being woven into mainstream finance. Have you heard of RWAs? And while the Fed won't directly own Bitcoin, the door is now cracked open. Legislation, public momentum, and future administrations could now push it even further. It's a foundational shift. Crypto moves from fringe angles to mainstream pathways, one bank statement at a time. The momentum is building stronger right now than ever before. So here's the bottom line. We're watching crypto go mainstream right now faster than it ever has. From Trump's bullish stance in major government crypto moves to ETF filings and banks now finally getting the green light. It's happening. Behind the scenes, institutions are stacking, stocks are surging, and the infrastructure is quietly but surely being built for what could be the biggest market shift that we have ever seen. And if you're only watching prices, you are already behind. The smartest investors aren't waiting for those headlines. They are right now preparing during the chaos, because when things really start to move, they'll move fast. And if you are not already positioned, you will miss it. Make sure that you are ahead of that curve. Be sure to join our community over at Trade Hero to help you out with that, where we break down everything that's happening in crypto before it hits the mainstream. As always, stay sharp, stay informed, stay early, and we will see you in the next one.